Good morning everyone, welcome to Offices Adda 24/7. My name is Niharika Walia Bhatnagar and I am with you with the area of accounting and financial management. Do you know what topic are we talking about today? Today we are going to talk about the area of company accounts. Okay, so with this we are going to talk about the first thing, that is, what do you mean by a company? Company refers to a separate legal entity. Company can buy things in its name, company can sell things in its name, company can buy property, company can sell property, company has its own PAN card, है ना? And the companies are just like you and me, they are also persons. But how do they maintain their books of accounts? And do they maintain their books of accounts in a different manner? Yes, they do. Why? Because the companies are supposed to follow the Companies Act 2013. Earlier was 1956, which was replaced in 2013. Along with that, the companies also have to follow the Income Tax Act 1961. So they follow all these things, and their books of accounts are maintained and submitted according to these two specific laws. So when we talk about the JAIIB November, so we have this company accounts there, है ना? So when we talk about company accounts, this is in module B. So let's talk about it in detail. Here comes the first question, everyone. What is the primary source for a company? What is the primary source for a company? Borrowings, in equity shares, debentures, or reserves? What is the primary source for a company, everyone? Primary source for a company is the shares. See, when you form a company now, it can either have shares, or that is their owners funds, and the second can be outsiders fund. Owners funds is of two types. It is equity, and the second one is debt. Under equity, these people are the ones who have the voting rights. They take the risk of the organization. These people get the leftover. If the company earns a lot, first of all, outsiders will get the interest, because we take loan from them. We will pay the principal and as well as interest to them. Then the one mistake there. One is equity shareholders as well as preference shareholder. Now there is a particular kind of shareholder which is between equity and preference shares. It stands here. They are called preference shares. Who are preference shareholders? Preference shareholders are those people who says equity and debt, who says I want fixed dividend. So we say okay, we'll pay you dividend. And he says give me dividend before equity shareholders. I want money and I want to get the money before you pay to equity. We say okay. And he says when the organization is dying, before it is dead, at the time of liquidation, whatever money is left, you pay me before equity. Because of all these things that they are asking, right? They are asking two preferences over equity, right? So then these preference shareholders get the preference there, but at the same time they don't have any voting rights. They get the voting rights only if the company fails to pay the dividend for continuously 2 years. That is where they get the voting rights. Otherwise they do not have any kind of voting rights. So this is the entire blueprint of the particular area of company accounts. So in this case the correct answer would be equity shares. Got the question, everyone? Now let's look at the next point. What is the maximum number of members in a private company? 50, 100, 200, or no maximum limit? In a private company, maximum is 200. Okay? The maximum number of members in a private company is 200. Okay, let's move on. It is 200. In a public company, maximum for a public company, maximum number of members, there is no limit. Minimum is defined, minimum is 7. For private company, minimum is 2 and maximum is 200. Okay. The number of directors required in a public company is 3, while in a private company it is 2. So if you are noting it down, then kindly note it down. Done. Then comes, there is a certain capital which is called reserve share capital, part of authorized capital to be called at the beginning, portion of uncalled capital to be called only at liquidation, oversubscribed capital or undersubscribed capital. Acha, when we talk about the capital, now capital is of many types, but when we talk about strictly about reserve capital means that kind of capital which is kept as you remember when we were, I think this is what I remember, maybe that might be in your childhood as well. When I was very young, my father used to say that he had a particular two-wheeler as well. That two-wheeler was some scooter there. There was a particular brand called Vespa at that point of time. So my father had that, and he used to say ki it has got a reserve. I think I forgot to get it the fuel filled. So right now I'll just get the fuel filled first, and then we'll go anywhere. So I heard this particular term quite a few times, that you should always get your petrol filled up before it gets the reserve area. Then in the cars even he was always like that you should always fill up before the red area comes. He said okay, and he used to still say that this is where the reserve enters. So it's like, what is it about? He says that the entire, you have a full tank, that means you have ample of fuel in the particular car or vehicle, what we would say. But when it hits the reserve, that is the last moment. After this portion is over, then nothing will work out. So that means reserve capital is a lender, it's a last resort. When we talk about this, when the company liquidates, and in case the money that which we have already got, which the company has fallen short. So the people who had given a commitment and we haven't asked any money from them yet, we call them reserve share capital. What do you mean by reserve share capital? The share capital which is kept at the time of liquidation, we will call these people and ask them to pay for it. It is part of the authorized capital to be called at the beginning, portion of uncalled capital to be called only at the liquidation, oversubscribed or undersubscribed. Oversubscribed is, I said that pata hai, I have only 10,000 shares, and you said, ma'am, kindly pay us more. Undersubscribed capital, that means if I asked, oversubscribed is, we issued 10,000 shares, people applied for 14,000 shares. This has happened with, I think, SBI credit card shares, that it was oversubscribed by 7 times. Not 1 time, not 2 times, but 7 times. Think about it, everyone. It's a huge number, isn't it? Now when we talk about undersubscribed means that I said, people, we are issuing 10,000 shares to you, and people should take at least 90% of it. That means they should take at least 9,000 shares. Not less than that. It is undersubscribed shares. Okay? If this is what we asked people to apply for, they have given lesser, and over means we asked for a certain amount and they are giving more. And when we talk about the part of authorized capital, in this case a reserve capital is that is kept for liquidation, the money that we can ask for when the money falls short in terms of liquidation. That is portion of uncalled capital to be called only at liquidation. Here comes the next journal entry, everyone. This question says that when a company issues a fully paid shares to the promoters are the people who give birth to the company. They are the ones who gave rise to the company. So for their services, the journal entry will be bank 2 share capital, goodwill 2 share capital, then promoter personal account 2 share capital, and then we have promoter expenses 2 share capital. ठीक है, when the company issues fully paid up shares to the promoters, basically they are paying for the incorporation of the company ना, है ना. So basically what I can do is we can call the expenses for which they have paid is incorporation expenses. That means the money that we pay for birth of the organization. Incorporation expenses. 2. We are not paying them in cash. Are we? No. We are paying the promoters in terms of shares. So can I say to share capital? Okay. Either this is the journal entry. One thing is that you have incorporation expenses to promoter, and then you pass the journal entry that is promoter to share capital. Done, everyone? So in this case, what would be the answer? The answer would be goodwill to share capital. Acha, we can take up incorporation as well. Goodwill is not the point there. I think I'll go for promotion expenses is normally known as incorporation expenses. So I'll go for the incorporation expenses there. Okay, since it's not there, I think then only acha, there are 2 points. Either you actually take it to the incorporation point. If you do not want to take it to the incorporation expenses, then you take it to goodwill. Then you take it to goodwill. Done? Next point, the security premium cannot be applied for paying dividend to members, for issuing bonus shares to members, for writing off preliminary expenses to company, for writing off discount on issue of debentures. Security premium cannot be applied. Security premium is the extra money that is given in terms of the shares. If the share is of rupees 10, then the company says we are a reputed company in the market, we should get more than that. So they are looking forward to 12 rupees. That is basically security premium. It cannot be applied. Where can it cannot be applied? For security premium reserve is actually a specific reserve. It can be used only for 5 purposes. You cannot use it for any other purpose other than the 5 purposes which are defined. It is for paying dividend to members, for issuing bonus to the members, for writing off preliminary expenses, or for writing off discount. The correct answer is for paying dividend to the members. It is used for paying the dividend. It cannot be used for this particular purpose. It can be used for giving bonus. It can be used for writing off the preliminary expenses and all. And preliminary expenses are those expenses which are incurred before the company is built. So basically I was trying to make the company, so I had paid for the documentation, CA, CS, the legal charges, everything was paid. Once the company was formed, these expenses belong to the company only na. They will call it preliminary. It's a kind of capital expenditure, but since it's already incurred, we call it a miscellaneous or a fictitious expenditure kind of thing. And this expenditure is capitalized and we divide it by 5, and every year we write off a part of it. So this is something which we talk about preliminary expenses. Writing off discount, when we have given discount on issue of debentures, we will write it off from here only. Securities premium does that part, but it is never used for giving bonus for dividend. Dividend is paid only out of cash. It is not paid from anything else. Next point, what is the primary objective of financial reporting for a company? Why do they do the reporting portion, everyone? Is it to maximize the profit, or to provide information for decision making, or to minimize the tax, or is it to satisfy regulatory requirements? Why do we do it, everyone? What's that one big solid reason for which we're going to look forward towards primary objective? Pata every company is required to prepare their books of accounts and they are supposed to keep it for at least 7 years. As per Income Tax Act, yeah, you should. And then if the case opens, then they can actually ask you up to 16 years. That is another point there. So in case of something where the person, if they are sued or something, then they have to pay a lot. Then this is basically this is to provide information for decision making. I think I can go for all these points, but the primary objective is to provide information. That is true. Then it is also to satisfy regulatory requirements, because for a company it is compulsory to prepare the books of accounts, and if you know about your amounts, then you can maximize your profits and you can actually minimize your tax as well. Technically all these points are the objectives of financial reporting, but to provide information for decision making is the primary one, because they are supposed to provide this information. Public companies have to provide this information to their shareholders. Okay? Otherwise, why would people invest their money into the organization, right? So in this case, to provide for decision making. Here comes the next question. When shares are forfeited, the capital account is debited with. Acha, let me talk about the share forfeiture now. Forfeiture, what do you mean by forfeiture? In a particular company, when we talk about the share capital means the money that is divided into different units, है ना? And we ask people not to pay in one installment. We ask them to pay in 4 different installments, 4 to 5. First is share application. People will apply and give me a advance kind of thing, that is called share application. Then we allot them shares, which is called share allotment. Then we can ask for share first call, and maybe there is another call, and we can also call it share first and final call. Now the entire 10 rupee, which is the face value, is divided into 2, 3 or more calls. For share application, it might be 4 here and 3 here and 3 here. So someone would have paid this 4, someone would have paid this 3. Till this 7 rupees, they have paid everything. After that, they are unable to pay. Company tried to contact, company tried to remind them, company has sent mails, they have tried everything. Now they are annoyed with it. They say, after this, we are striking off your name from the list of our shareholders. You are no more the shareholder of the company. They say, what to do about it then? They say, if the person is no more the shareholder of the company, then what will we do? Whatever money they have given, we will not return this money. This is something that we are going to keep as a penalty from them. So whatever money which has been already called up, we will cancel that part. If we have called share application and after that the person is not paying share allotment, and then we decide to write off his share, then you have already called 7 rupees and the person is not paid 3, and ultimately you strike off their name. And the second thing can be, you have already got overall 10 rupees, he has already paid 7 but failed to pay the remaining amount. So in this case, it is the called up value. Okay? Share forfeiture is the advanced level of the company accounts. Okay, now let's look forward to what's the next question. Right shares are the shares which are issued to the direction of the company, are issued to the existing shareholders, are issued to the promoters, or are issued to the vendors. Right shares are shares which are issued to the previous, the loyal shareholders, I would say, for investing their money into the company. So we do the area of right shares. Right shares means the market value of the share would be 100. You are getting that particular share for rupees 60 because you are an old shareholder of the company. That's called right shares. So these are issued to the existing shareholders of the company. Done? Okay, so that's it for the day, everyone. This is where I end my session. But before I end my session completely, I hope you are I hope you have already started with your studies. If you haven't, then this is high time, everyone. You should start your study as early as possible. And what should you do at this point of time? If you're looking forward to it, then check out our website or our app for further details. You can take up www.adda247.com. There you can find the area of JIB, CIB, Mahapack. Okay? This is for JIB and CIB Mahapacks. If you're looking forward towards only JIB, the Mahapack is there. For only CIB, the Mahapack is there. For JIB plus CIB, the Mahapack is there. If you take up the JIB and CIB Kama pack, what's the fun of it? See, if you look forward to this particular area, this is going to be really useful. Why? When we talk about this area, then you get, acha, there is one more thing. Due to the eve of Teachers' Day, we are giving you a discount of Guru 80 at this point of time. Just have to apply Guru 80. That means you will get 81% discount, everyone. 81% discount plus double validity. You buy it for 12 months, you get it for 24. So this is the perfect time that you should buy this particular pack, because you will get it for a minimum price and at the maximum benefits. What are the benefits? Regular classes, live classes, recorded classes, previous classes, the classes that we are going to have in future, everything is available for you. Marathons, mega marathons, whatever has been already conducted, we will get that particular part. Then you will also get doubt classes. At the same time, you will also get the area of mock test paper, है ना? So if you're looking forward to it, then check it out on our website, on our app, and don't forget to use Guru 80 to get the maximum discount and double validity on our Mahapacks. Thank you, everyone.